Yes, good evening, everyone. Thank you. Welcome to the class sponsored and taught by the Silicon Valley Score. The website is siliconvalley.score.org. I would be your presenter for tonight. I'm Christopher. I'm an IRS acceptance agent and also a subject matter expert for SCORE. The SCORE offers free consulting, additional classes, and other assistance in creating your business. If you have further questions, feel free to call at their number at 408-453-6237 or visit their website on siliconvalley.score.org. I'm just testing the PowerPoint. Okay, there you go. Today we will go over, we're already November, December, time is so fast. Then we would have to cover the different IRS emergency business funds under the CARES Act. How is your business doing? Have you accessed these available funds? Each of these incentives are designed for employers to increase their access to cash. This is a 4-week webinar series that will be conducted every Tuesday at 7 p.m. Pacific time. So you will learn how to access these tax credits that apply to the business. Unable to join, just register. There's a click, just go to the SCORE website, siliconvalley.score, and go to their calendar workshop. You would be able to find the date and the time. All you have to do is click the link, enable for you to get the Zoom link on the presentation. So today we will cover first, this is our first out of our 4 workshop, the frequently asked question for deferral of employment tax. Like what I've said, I will be your presenter. I'm a business owner myself. I've been practicing tax, payroll, and bookkeeping for the past 8 years. I'm a tax professional, also an IRS certified acceptance agent. For those of you who doesn't know what an IRS acceptance agent, we are authorized to practice authenticating the documents, the original documents of anyone who would like to apply for a tax ID number. This is for reason of reporting your any income to your business. You need the tax ID number on your individual tax return, and that is why being a certified acceptance agent, you don't have to submit your original to the IRS office. We just have to have either virtual meeting or even going to the office where my office is at. The I'm also the 2018 Minority Business of the Year as my contribution to the community to provide free information, because I believe that what we do know is our greatest asset and what we do not know is our greatest liability. That's why we are continuously providing information and able to grow and help your business. Just a disclaimer that the materials of this webinar are intended to provide general information and guidance on the subject concerned. Examples and other materials on this webinar are only for illustrative purpose and should not be relied upon for technical answers. SCORE and the speakers take no responsibility for any errors or omissions and or for the loss incurred by the individuals or companies due to the use of the materials of this webinar. The webinar agenda, the webinar will last for 30 minutes. For those of you who have questions during the presentations, please access the question box. I think it's on the right side, and then put your questions. At the end of the presentations, we will answer any of the questions being typed on the chat box. This session is being recorded, and the recording link will be emailed to all participants. Let's go over it. We will have a hypothetical client. Let's just assume her name is Gloria. She's 45 years old, a single mom and owner of a restaurant running her business since 2014. She has 20 full-time employees under payroll. The question, can her employees benefit on deferring their Social Security contributions? But my questions to you for this presentation, do you guys have any employees? If you have, just feel free to type how many number of employees on the chat box, so we would know the number of business owners that have employees on this presentation. What is new under this under the CARES Act for the employment tax deferral? On August 8th, the President of the United States issued a presidential memorandum directing the Secretary of the Treasury to use his authority pursuant to Section 7508A of the Internal Revenue Code to defer the withholding, deposit, and payment of certain payroll tax obligations. This is specific on the memorandum for the Secretary of the Treasury under Section 2, deferring certain payroll tax obligations, that the Secretary of the Treasury is hereby directed to use his authority pursuant to 26 USC 7508A to defer the withholding, deposit, and payment of the tax imposed by 26 USC Code 3101 A, and so much of the tax imposed by 26 USC 3201 as is attributable to the rate in effect under 26 USC. There's so much USC here. 3101 on wages or compensation as applicable paid during the period of September 1, 2020 and through December 31, 2020, subject to the following conditions. Letter A, the deferral shall be made available with respect to any employee, the amount of whose wages or compensation as applicable payable during any biweekly pay period that generally is less than, okay, take note, it should be less than $4,000 biweekly, calculated on pre-tax basis or the equivalent amount with respect to other pay periods. Letter B, that the amounts deferred pursuant to the implementation of this memorandum shall be deferred without any penalties, interest, additional amount, or additional to the tax. This is the portion of the code. All you have to do with the copy, you just have to click the resource here that I provided, the link. You just have to click under the www.whitehouse.gov. This is the memorandum that they issued, and you would be able to find it on the website. Let's talk about what are the applicable wages, Christopher. For the purpose of this notice, applicable wages means wages as defined in Section 3121 a compensation as defined in Section 3231 E3 paid to an employee on a pay date during the period beginning on September 1, 2020 and ending on December 31, 2020, but only if the amount of such wages or compensation paid for a biweekly pay period is less than the threshold amount of $4,000 or the equivalent threshold amount with respect to other pay periods. How this is going to work. Typically, employees and employers each pay half of the total 12% Social Security tax due for each worker. This is part of the FICA, the Federal Insurance Contributions Act. Social Security tax is a portion of that. Under the executive order, employers may choose to refrain from withholding the 6.2% from employees for Social Security, but must still contribute their own portion for each worker. Under this executive, they can actually defer the payment of the employee's contribution. However, as the employer's contribution for the Social Security tax, the employers still need to contribute for each worker. Participation is only optional for employers, and there are no penalties for non-compliance. The suspension applies to employees whose wages are less than $4,000 for a biweekly pay period, including salaried. It is not just the per hour employees, but also salaried workers as long as they're earning less than $104,000 per year. Christopher, how did you come out with the 104,000, or what is the computation? Remember, in a year there is a 52 week pay. There's a 52 week in a year. All you have to do is divide 52 to enable to compute, so that will come out to 26 weeks. 26 times 4,000, you will come out to $104,000 per year. It should be earning, the employee should be earning less than that. Just to give you an example, this is for the FICA tax. As you would see on the PowerPoint presentation here, the Social Security, it's divided to Social Security and Medicare. The employer pays 6.2%. Also, the employee pays 6.2%. So the Medicare is also 1.45 per the employee. Now, for the sample company LLC, let's say you have a manager. Gloria has a manager. His name is Carlito. So for example, Carlito's gross pay biweekly is 1,923. So out of that 1,923, there is a FICA, the Social Security is 119. So beginning September 1 until December, if the Carlito, the manager, needs additional funding, maybe it's for Thanksgiving, for Christmas or New Year, he has an option not to contribute that $119. So that is an additional funding enable for to supplement his day-to-day expenses. That is starting on September 1. This is the only one that he can withheld, but of course he needs the employer Gloria, he needs to she needs to talk to Carlito if Carlito wants to do this option. But of course there are drawbacks with this one that we will cover on the next slide. The guidance does not clarify if employees can opt out if the employer chooses to suspend the tax withholding. There's no specific guideline whether if it's an optional for employees or not for this. But on the article for the CARES Act guidelines, for government employees, I think it's already been implemented. This has already been implemented from the time of the memorandum has been signed. When the deferred taxes should be paid back, this is what I'm talking about. Remember, guys, this is not a forgiven or a free money. Okay, this is just a deferral, which means suspending your Social Security tax contribution from September to December. The affected taxpayer must withhold and pay the total applicable taxes that the affected taxpayer deferred under this notice ratably from wages and compensation paid between January 1, 2021 and April 30, 2021. Which means to say, if you suspend, let's say, I don't want to give a Social Security tax contribution of $119 beginning September, October, November, December, then I have to pay those back and give it back the payment between January 1 and up until April 30, 2021, or interest, penalties, and additional tax will begin to accrue on May 1. That is the drawback with respect to any unpaid applicable taxes. When we explain this to some of our clients and business owners about this, they are not really into this because number one, there is a lot of computations as we will go over which form that you have to fill out. If necessary, the affected taxpayer may make arrangement to otherwise collect the total applicable taxes from the employee. Okay, so this is how the form that you are going to use, the employer, for example, like Gloria, she needs to use the form 941. On the second page, this is the revised version of the PDF 941. Always remember, don't use the old version of 941. Why? Because on the second quarter of the year, the form 941 was already updated because they added line 13B. So 13B is the deferred amount of Social Security tax. That $119 that I mentioned a while ago, the employer, whenever they submit this form, they need to put the total amount of deferred Social Security tax on this form and to report it to the IRS quarterly online or submit the form by mail. Then this is the common question of everyone. Can it be forgiven rather than deferred? As of now, White House officials have discussed the tax deferral forgiveness. However, doing so would require new legislation. Today is election day, so let's see what's going to happen. Until further clarity on the guidance is available, employers who receive requests from employees to withhold Social Security taxes or who wish to suspend withholdings under the deferral program should first speak with their tax expert or tax attorney. And that is the overview for our employment tax deferral. Now, moving on Gloria's case, she currently has 10 employees and one of her employees has symptoms of COVID-19. So what's going to happen? Is there any available tax credits under the CARES Act? This is what we're going to talk about regarding the family of first, the credit, the ERC, Employment Retention Credit, that will be discussed on next week, same date and time. So that would be the employee retention versus the family first tax credits. So now we will go over with the questions. But before we proceed, we have the resources available for you guys. You just have to click the different resource link. Feel free to read. This is directed to the Congress and also to the IRS website. Even on the White House, all the links are provided for your further reading. For the final words, while these tax incentives are designed for employers to increase their access to cash, it is still subject to limitations and regulations. And the score can help. You just have to make an appointment with the score consultants or visit their website. Thank you for attending the class. If you have any issues with the class or score, please email workshop@svscore.org. We'd also like your help by writing an online review of our class. You can do this at Yelp underscore of Silicon Valley. So the link provided below. Today, thank you guys for attending this presentation. Then we will now go over with the question and answer.